Hey, g'day guys, Sam here from TradetoProspa to give you a link review or chain link and see what's likely to happen and based on a few logical steps. Okay, start from the beginning. Now we'll just get rid of that and get rid of a few other things for the time being. Looking from the beginning, we had this base, I think it's 2019, so it's just before the bull run started. And so we count our alley wave with this out there. So wave 5 all the way up makes sense. And it's aligned with this bugger here, well, up to a certain point anyway. So when you look at this, we've got the top structure and wave 5 aligns with that. So when you look at this with the top here, and we also have this here. Now that seems to be that there to me, this here. So those two things I think are aligned. And if you look at my ABC count from 0, so what we do is that's our A, that's our B level, and that's our C from a correction wave. So if this is our bull run, this is our correction wave, and then we're going to have another upward momentum. The question is, where is the bottom? So that's what we're going to look at. So from my perspective, when we look at this ABC count on the way down, so we hit our top, we have this ABC correction with the blue part, this A, B, C, that's a correction, and then we'll continue on down the side. Once we lose this, you can say probably that equates to the topping structure. This is our Wyckoff SOS level, or you can say markdown area. Usually it's volatile in an area, and then it drops down to this reaccumulation, which is that. So from a cycle perspective, we still haven't done this and that. That's what I'm anticipating. So we've come down this far, but we still have yet to do this. So with that logic, if we look at my alley wave count, we're looking for wave 5. So wave 5, if we were to measure it, we can do a number of ways just to do this. We can get our fib extension from the top to the bottom and to the top and just massage it so it makes sense a bit, because it's not exactly, so yep, we still get there, we're still within the price range, and we have our Fibonacci as 1, because we're not really deviating, we're just fine-tuning it within the candlesticks. So the Fibonacci is 1 and the bottom is 1.414. Makes a lot of sense, doesn't it? It's really aligning with fibs. So, and you see 1.272 is actually played a role as well. Support here as well. So that's played a role, and so we can look at this in closer or close up. Also, we can all look at what levels that we are likely to hit. So our 1.618 is there. If we were to measure that or look across, it makes sense. That was previous resistance right there. And the breakout, like there was a bit of a head and shoulders there, or sorry, double top. So this level has confluence. Obviously, this level has confluence as well, up to a point. Let me just bring that down there, give or take. Best suited line. So my thinking is that this, from a visual perspective, is it could probably wick down a bit and go down there as well. And that might be our markdown price or our reaccumulation. So it wouldn't surprise me if we came down all the way down here to 2618 if it's a real bad bear market. But for the time being, I'm looking at that area as reaccumulation and potentially a reversal. So I'm thinking along the lines of that is our fifth wave. We have something, we go up, and somewhere up here we come back down. The question is, do we come back down lower, or this is for next year, or we just come back down and then continue up? And that's going to be a hard thing to measure, but I'm not going to go and try. It's just explaining it that this point makes sense. If this is the bottom for this cycle, we can just do that, and our 618. So we might just get a reversal to the 0.5 or the 618, definitely, and then I do believe we'll come back down. So once we hit a certain level around there, in my opinion, if this is the bottom, this is going to be resistance. That's going to be a topping off structure, and then we're going to come back down. The question is how far down, and that's going to be the hard part to it all. People, if you look at Bitcoin, and I'll bring it out if you want. Give me a sec. Let's just bring out Bitcoin. If you look at Bitcoin in the past, when we hit our bottom, that was our bottom in the past. This was our golden ratio. So if we were to get the bottom to the top, and we just do that, you can see the golden ratio is pretty much there. All right, and then so what we did is we did our top, we hit our bottom, we did our golden ratio, and then we did our ABC correction, and then the bull run. So I'm looking for that, and the question is, would it go below? So in this case, it didn't. It came back down to here. It'd be a black swan event. Guess what? There's going to be likely a black swan event because there's some information about derivatives being $100 trillion. Yeah, I'd like to see what happens with that coming out and how it's going to impact the markets. So that black swan event could also push that down to this level and might make sense. That's you just got to picture it. Otherwise, I think this ABC could come down to this level again and then up. So, yeah, I'm looking for this level as Ethereum's bottom. Now we can look at this in another way as well, just to rule, not to rule it out. Let's have a look at that quickly, and then we'll look at the smaller time frame. So that's our 1.618. We can also get the Fibonacci from the top, and if that's our 1, the bottom of that is referenced as 1. We just bring this in, and you can see that the 1.618 is perfectly acting as support. So you can see how this is aligned with the 1.414 and the 1.618 as the bottom. However, generally I would use that as a bottom, all good support, but because when we look at from the cycle perspective, it doesn't make sense that that's going to be the bottom. It doesn't, but it can, because we did have capitulation down there, and it is possible that we can go up, and I could be wrong in terms of looking for a wave 5. So if I was to use this 1, 2, can this be 3 and 3, 4? So let's see that 1, 2, 3, 4. Yeah, that could be a wave 5 as well from that perspective. But then that's got the 1.44. I still feel like that Bitcoin's got a bit more to go down, but the alts are performing better. So it's nasty. It is a nasty thing. Buy the dip, average in. But at the moment, I do see this as a resistance perfectly with this Fibonacci, and funny enough, it seems to be aligned with that as well. 0.5 has nothing there. So when we look at this closer and come up with some conclusions, let's look at this. Actually, let's look at the RSI as well. So this is the 3-day. Let's look at the weekly. So from the weekly perspective, the RSI is not going to really help us. It's a bit ugly. If you look at that, it's broken down from. So I'm looking at that perspective. It's broke. It's not broken down yet. That's my visualization. So that's what we have. So if it still holds, I think this could still come down, and then somewhere it's either going to go break up or it's going to come down and then do the bottom, which would probably equate to that, and then up. So we've got to check the RSI how that turns out to be. At the moment, if it breaks that top level, then I would be bullish, and that could go up further. So that is, then I'll pretty much say that's just the ABC correction, and then further up, start our new wave 1, 2, 3, 4, 5. So you can see the bigger picture. With the wave trend, there is nothing, it's just nasty. Here there is some, the red RSI, so with the Phoenix indicator, usually I use that. There is, see, that was a bottoming structure. We had a lot of bearish oversold conditions, divergence, and now we're just sideways, just ugly. It's very ugly. Doesn't look like any accumulation. It's just all over the place. So, but when we look at it from a close-up, the green RSI and the blue is pretty much up above 50%, and the red isn't. So this is a bit unorthodox. Doesn't quite make sense. We need to see the red RSI go above to start thinking bullish. So that's on its way up, but not convincingly at the moment. There's a bit of bullishness here on the weekly, and so let's look at it up close. Let's just do this. Whoops. So when we look at that on the weekly, if I can, we have some 200 moving averages here. I'm not sure what they are. They are the weekly 200. Weekly 200 moving averages. Okay, so that's not makes sense. If we break above them, that will make bullish. Here's the 200 daily. So if we could go above those 200 dailies, that's a good start. But the weeklies are ones just started to appear. So when we look at this, you can see this middle level that I have right there. We are closing below it at the moment. So nothing bullish there. Interesting enough. Well, I got two. Okay, that's it. Right. Just seeing it differently. So we're going to apply our Fibonacci there. Right there. And I'll just use a different template. That's our 618 level. So we need to close above it. At the moment, it's finding as resistance. So our golden ratio is just right across, actually. That is our golden ratio, and we're not above it at all in this range. So we've got to see the weekly close above it to start thinking bullish. At the moment, it's looking down. Not that that gives us much of a clue. Let's look on the 3-day. So the 3-day still shows us that we're coming down. So that's our golden ratio. Let's add another Fibonacci there. Let's just use that other template. And I can get rid of this red. Let's just make it a bit more clear. So if we were to break above it, these are the ones that I'll be looking at as short-term resistance, and you can see how that comes aligns there. There's another method of doing this as well, which I'll use this as one. I'll put my Fibonacci there as one, and you can see the 1.414 as acting as resistance. Then we can see that the 618 here is currently holding support along there. So on the smaller time frame, that is our golden ratio holding it up, and the bigger picture, it's resistance. So we're in that range, and if it goes like that, it wouldn't surprise me. That's a bullish scenario that then we'll probably continue on. The bearish scenario will probably continue down. Let's try to count how many things we got here. We got one. So I'm going to count the pivot points. Okay, so there's more pressure. Actually, you can't. It's free. Bummer, doesn't help. And we can see this trend line was acting as support, and it doesn't look like a bear flag at the moment. Even though it's popped its head above it, it's still below it, and that could act as a bear flag. And yeah, if we did our A, B, C Elliott wave count, if that's our A, B, C, D, E, that gives justification for going down further. Go with the trend. Our trend's down, and like I said, with my Elliott wave count, or the cycle tells us it's going to go further, but the Elliott wave count could be 5 here or further down. I have not much more to add to that, guys. I'm bearish. I do believe Bitcoin's going to go further down, and with that mindset, it's likely to come down as well. And you can see that my target is $4, and in the worst scenario, if I was to do this, put my one there, nah, it's still the same. That's my range, and visually, maybe $3, $3 to $4, but I do believe $4 is going to be a strong support. Based on what I look at, this visually, that might be the case. $3.80. That's pretty much it. I see that level as well. So $3.90, $4, $3.90 to $4. That's pretty much it. That I think wave 5 will do it. If it goes further down, then I got $3. That's it. I'm gonna leave that, guys. If you like it, please give me a tick, and even better, subscribe. Come and join our Telegram channel, and it's free for 10 days, and the monthly fees are very low, so you might benefit and pick up some tips along the way. Talk to you soon. Enjoy. Cheers.